Hello and welcome to the Stock Planner channel. Today I'd like to talk about three stocks, actually one stock and two ETFs. One deals with real estate, one deals with home improvement, and the other one deals with telecommunications. But before we do, I want to remind you that we are an education channel sharing our ideas and winning. Do your own due diligence, learn it, and win for yourself. Let's get started. So the first stock and ETF that I'm thinking about shorting this week is Lowe's. Stock ticker LOW. It's a consumer cyclical stock. Home improvement, everybody knows what Lowe's is. And you got to think, is it going to go up or down? Is it going to do well in inflation, recession? Is people going to fix their houses during a recession or an inflation period? Or more houses going to be built? It's retail, but it does sell to contractors. And according to FinBiz, the target price is $238. It's currently trading at $181. The $238 is way up here. This is TradingView. It's free, and my settings that I use are in the description below. Anyway, let's take a screen out, and we're on the daily, but it's going to go to the weekly. Just take a quick look. And it seems like it's been in a bit of downtrend in the last 3 weeks or 4 weeks. It's been in a holding pattern. Maybe there's some kind of support right there. I like to use the daily time frame to enter trades, and that's where I take my signals. I use the MACD, and there's a signal here. This is a zero lag MACD. But I generally say when it's below the zero line, I look for longs. And when it's above the zero line, I look for shorts. And right now, this is above the zero line. So, I typically would look for a short, even though that looks like it's going up. It's just stochastic RSI, and when it's above the 80 and come back around, that's when I go look for a short. It's above the 80, but maybe not come back around. Maybe I'm imagining things. And this is the RSI, and when it's above the 70 and come back around, that's when I take a short. And it's almost doing that. So my indicators saying, look, it just might be overbought and looking to come back around. Can anybody see that imaginary trend? Or do you see an uptrend and bouncing off of some kind of support there? Based on what you know about the conditions of the market, we have some headwinds on inflation, recession, shipping, or are we about ready to go ahead and recover our industrial power? I think we have about 6 months to 18 months of this kind of scenario. So a main point in the strategy that I often use, and I use several different strategies, but generally I think the market is going to move about 6 to 8% in one direction or the other. And I have to decide what direction that is. In this case, I decided that it was going to move down 6%. And generally, I enter, as I told you, when the RSI is crossing down for short, or when it crosses up over the 30 for a long, 70 and 30. And I use the other three indicators as well. That's triggers. You can use anything as a trigger. It's a matter of choice and preference. And the entries is not as important as a good risk-reward ratio. So I'm trying to win a little more than I'm losing when I enter a trade. So I looked at the expected move using options for Lowe's, and it expects to move about 6%, exactly 6%, in the next month. And if it does that, based on its current price of 181, 6% would be 192, right here. And the low strike would be 170, and it's right here at its support. So will it go down to support first or trickle back up? And if you took $1,000 and bought the stock and it moved 6%, of course it's going to be $60, which would be 24% per year. And that is as good as Warren Buffett's doing. I use options a lot of times in my trades, and what I would do is a broken wing butterfly strategy. I have posted that strategy out on my free Discord. Please check it out. Well, the next stock is an ETF, which is a basket full of stocks. Ticker XTL, which is telecom ETF. Looking at the weekly, we can see that this ETF has been steadily going down since July of last year, June and July. Will it reverse itself? Swinging back to the day, which each one of these bars is a day's worth of data. And we're going to check out the analyst rating, which you're going to be disappointed because ETFs do not have target prices or analyst rankings. You'll have to do that yourself. Again, we're going to assume a 6% move or more. Pick a direction, and we're going to enter in when we have a crossover of the MACD or the RSI or the stochastics. Now, this one has an expected move of 15%, almost 16% over the next month. And that will put it somewhere around 92, way up here. Wow. Or 67, way down here. Is it going to go up this way based on the movement that it has had it? Or is it going to go down? Or is it going to stay around the same area? If it only moves slightly, we still want to win. So the RSI, that's this one, and my settings are in the description below again. When it goes above the 70, it comes back around, which it almost did. And the MACD is above the 0, which is slightly. And the stochastic looks like it might come around. When they all occur at the same time, that's a 3-indicator strategy. It's not quite satisfying that, but my indicators are looking like that we should look for a down according to these indicators. You can find other indicators that say up. You have to decide. That's trading. And I hope somebody leaves a comment below that disagrees about telecom going up or down. But with this percentage return and you get the direction right, and it actually does move, and you invested $1,000, you'd have $158 in your pocket somewhere if it moves in the next month or the next 3 months. And you could have a percentage return of about 15%. And of course, the APR would be 60%. Unreal. But there's the dilemma here. What if it doesn't move much? Going about 41 days out, 43 days out, and doing a broken wing butterfly, which consists of selling 2 calls and buying 2 calls. And if you set up this kind of strategy, as long as it stays below $81, and what is it now? 79. As long as it stays where it's at or below, you're going to win something. But you win the most right here. And that should be around $78. That's your sweet spot. See? Or you sell the strikes. So you play it that way. When if it gets around there anytime during your trade, that's the time to hit. That's going to be your sweet spot. And that could occur several times. Now, you only get a small amount of credit, but you have this potential to win of $353. And of course, it goes the other way, and you don't do anything about it. You're going to lose $350. That's how I play this, because if it only moves a small amount, you could capture a win. This is the free tool called Option Strat. It's a simulation tool, and it also has a great chart because you can shows you where the playing field of this stock is. If it only moves a little bit, you can take profit any time you want, and if you hold out to the end, you can do pretty good. The dark shaded areas are your sweet spots, and you don't want to get up in here. So for those people, I always try to assume about 6%. And that's where I try to go for. And it gradually moves up through. That's my playing field. And of course, you want to try to keep your losses to around 5%. So if it hits 5% or so, you might want to think about taking a loss. That's how I play options. I don't want to say too much about it because sometimes sometimes buying and shorting the stock is just as good as using options if you're doing a short-term trades. And for those who are buying and selling calls, it's very expensive. It can easily get away from you. So as long as this trade stays about where it's at or below, you can win. And I think it's going to hit support again. You receive $53, and that's what if it goes down and goes down and goes down and goes down, and it doesn't hit your sweet spot, it doesn't stay in this area here. It goes further down. You'll get your $53, but you could have a potential of $353 if if it hits your sweet spot around the strikes that you sold. I usually shoot for 25% of the max profit, and that would give me about $88 early, which is 25%. So I can achieve a little better than actually buying or shorting the stock. Now let's go on to the last stock. This last stock is actually an ETF again. It's real estate. An ETF is an exchange traded fund. It's a basket full of other stocks. And you have to ask yourself, is real estate going to do good in the next 3 or 4 or 5 months? Or has the party ended? I think the party has ended. With the interest rates going up, we just showed you a Lowe's stock where I think that housing is, and spending on housing is going to go down. And the housing market has been in a bubble. So I think the party's over. So I think this ETF is heading for further downside. This is the weekly in TradingView. You can set your charts up just like this if you wanted to get started. And my settings are in the description below. It's free. And you can see that it has been in a downside slide for some time. Or you could say it's bouncing around. And you could say it's hit its low and maybe coming back. There's no target price for an ETF, and this is my ranking because there's no ranking on ETFs as well on FinViz. This is FinViz. Well, we hope it's going to be about a 6% change in direction, and we're waiting for some kind of crossover. The MAC is way deep in its territory, and typically we'd look for a long. The stochastic has come around. We're looking for a long, and I'm saying it's going to go short, so this is doing us no good. And this is the RSI, and it really has no direction. But it had a crossover maybe 10 days ago to go long. That would have been predicted that little rise right there. Will it continue up or down? Who knows? Just lines. I'm basing it on what I think the conditions are. Conditions of the overall market, that is. So using the tool to look at the move expectation for this ETF, and it says it's going to move about 4 to 5%. If it did that, a high would be 97 and a low would be 88. Not much movement. This is primed for some kind of option spread, an iron condor, where it stays in between those two values. It's hard to see the trend on this, but if you picked long or short and you put $1,000 in shares, you get about $45 in the next 2 or 3 months, which is an 18 APR. So if you think it's going to hit this or this, your low strike or your high strike, and you're right, you could put $45 in your pocket on a $1,000 investment. Is about 4.5% or 18% APR if you did it 3 or 4 times a year. Not a lot of movement with IYR. I'm going to use, again, a broken wing butterfly, and I'm saying it's going to go down further, and I have put down my trade or possible trade in my free Discord. Out under Stock Planner, there's your XTL we just talked about, the IYR, and you need about $500 to do this for a possible $710 profit. I like those odds, but it has to go down. It can't go up. Anyway, join our Discord group. Participate. When you engage, you're going to win. I found out since I started doing these videos, my trading has gotten more consistent because I slowed down. I justified my trading a little bit better in words, and I put myself out there for critical peer review, which I welcome. Because I'm trying to predict the market for myself. No one can predict the market. No one. If anybody tells you that they know which direction it's going, really, I wonder how. And why aren't they millionaires? You can't predict the market. But you can use probability. You can use your indicators and win. Just looked at IYR. Is it going up or down? It has been going down. The telecom spider or ETF. Is it going up or going down? Or has it stabilized? And lows, which looks similar. Is it going up or down? It has been in a slide. Man, if you can predict the future, we'd all be millionaires. These are my 3 short trades for early next week. Please like and subscribe this channel. We'll catch you on the flip. Happy trading.